Think about this. A company that makes yellow school buses just became the darling of Wall Street. It sounds boring, right? But what if I told you we found a hole in their pocket the size of a crater? Welcome to HDIN Research. Today, we're tearing down Blue Bird's 2025 performance. It's a story of record profits, hidden risks, and a quote that might just run out of fuel. Let's dive in. First, the wow numbers. Blue Bird didn't just grow, they exploded. Imagine every single person in a mid-sized city buying a luxury car. That's the kind of scale we're talking about, with $1.48 billion in sales. But look at that 20.5% margin. In the world of manufacturing heavy metal, that's not just good. It's, I can afford to buy the company next door. Good. They sold 901 EV buses. That's enough to keep a small country's kids silent on their way to school. But here's the kicker. This entire $5 billion party is being paid for by someone else's credit card, Uncle Sam's. Blue Bird isn't just selling buses, they are hooked on federal subsidies like a gamer on caffeine. If the government decides to pull the plug on the EPA funding, that massive order backlog doesn't just shrink, it evaporates. We're looking at a $5 billion regulatory cliff. If the tax credits go away, these green buses suddenly become very, very expensive lawn ornaments. So here's the $1 million or $1 billion question. If the government stops writing checks in 2026, does Blue Bird crash and burn? Or do they have enough fuel in the tank to survive on their own? Can they stay profitable when the free money stops flowing? Our McKinsey-style deep dive shows they aren't just sitting ducks. They've built a three-layered shield. First, they aren't just betting on EVs. They have propane. Think of it as their safety school. Second, they build their own chassis. They don't wait for parts, they make them. And third, management's bonuses are tied to cold, hard cash, not just green vibes. They are de-risking the house while everyone else is still arguing about the blueprints. Look at the pie. For the first time, more than half of their money, 54%, comes from alt power. In plain English, they've officially stopped being a diesel company and started being a tech company that happens to have wheels. Diesel is now the side hustle. This shift is why they are making more money per bus than ever before. It's like switching from selling basic flip phones to iPhones. The profit per unit is just on another level. This chart is the holy grail of the turnaround. From 2021 to 2025, they went from struggling to pay the bills to a record 20.5% margin. How? They raised prices by 6% while keeping their costs under control. That's pricing power. It means customers are willing to pay extra for the Blue Bird badge, even when things get expensive. That's a massive win in a price war. What's next? They aren't just making school buses. By late 2025, they're moving into bigger delivery trucks. By 2026, they're launching a steering airbag system, the first in the industry. And the biggest move? They are cleaning up their pension liabilities. They are literally scrubbing the mud off their balance sheet to make the company look irresistible to big investors. In the playground of electric buses, Blue Bird is the bully. They own 64% of the market. Their nearest competitor is essentially a tiny speck in the rearview mirror. Being the only pure-play independent means they move faster. They don't have to ask a parent company for permission to innovate. They just do it. Let's talk about the danger zone. We've mapped out the funding. The good news? The money for the first 1,400 buses is already in the bank. The bad news? New grants for plant expansion are on thin ice. This is the red zone. If this funding gets cut, Blue Bird will have to spend their own lunch money to grow. That's the risk you need to watch in 2026. Why can't competitors just copy them? Because Blue Bird builds the whole bird. They don't just buy a chassis from a truck company and slap a bus on top. They design the bones, the skin, and the brain. They have exclusive deals for their engines until 2030. It's like having a secret recipe that nobody else can get the ingredients for. Management is putting their money where their mouth is. They bought back $39.5 million of their own stock. That's like a chef eating their own cooking in front of you. It shows they trust the ingredients. Plus, they're cleaning up the pension mess. By 2026, this company will be lean, mean, and very profitable. So what's your bet? In our bull case, the stock hits a home run if the government stays green. In our base case, they still grow steadily. But in the pessimistic case, if batteries get hit with 100% tariffs and funding freezes, they'll have to tighten their belts. But even then, they have enough to survive. This isn't a company that goes bust. It's a company that adapts. The verdict is in. Bluebird has stopped being a political puppet and started being a manufacturing machine. They have the pricing power, the integration, and the cash to survive a storm. While others are worried about the next election, Bluebird is worried about the next delivery. They have built a floor that the competition simply hasn't found yet. This is just the tip of the iceberg. At HDIN Research, we don't just look at spreadsheets. We look at the why behind the what. If you need this kind of deep dive for your portfolio or your company, reach out to us. Check the links in the description. Like, subscribe, and tell us in the comments, is the green transition a gold mine or a trap? See you in the next one.